Billions Available is an interesting title for the session. And between now and then, and I would challenge the speakers as they come up to explain to us, are they really available? And I'd have one trick questions for you to find out if that is true or not. But we have an amazing panel today. Actually, when we say billions available, to them it is, because they manage billions of euros. And we want to see who has access to these billions. Let me introduce Henry Briance from Certares. Is Henry with us today? Here he is. And Henry had almost back-to-back panels, so he was just here on stage about a half hour ago. And his topic on sustainability is very relevant to the topic of finance, the great deal of intersection between sustainability and finance. Serge, Mesguisch, is Serge here?
Yes, hello.
Oh,
hello, everybody. Hello.
I was hoping to shake your hand, but good to see you online again. And I know Kata is here. There she is. Kata is from ICF. And Serge is BPI France.
Yes.
Of course. And then we have Sebastien Manceau. Did I do that right? From Roland Berger, and he runs the Paris office, which happens to be the second largest worldwide for Roland Berger. I will take my seat and take the discussion. Oh, we have an amazing panel with us today. It's good to see you again in the second edition of World for Travel. We happened to be on the same panel last year, and I think the organizers thought I did a great job asking you questions, so now we'll see if we work that again. It's interesting that we're still emerging from COVID, and some destinations kind of maybe went back to their 2019 figures. Many others are not. So as you heard me speak in the morning, I come from Bosnia and Herzegovina. I'm not from Bosnia and Herzegovina, but I live and work there. And Bosnia and Herzegovina performance post-COVID is similar to the European average. European average right now, tourism is back to about 80% of pre-COVID performance around the 2019 figures. In Bosnia and Herzegovina, it's approximately that or a bit better. So we're doing a bit better than kind of the region. And some smaller destinations are doing very well, others are not as much a challenge, but nevertheless, we're seeing the resurgence of the industry. And past projections thought that the industry would come back to 2019 figures in 2024. And I think we're seeing pretty much 2023 will be the year for most destinations. So I think everybody's bullish on the industry, and people are traveling again. And there is this whole notion of vengeance travel or revenge travel. People got stuck for a couple of years, and now they're just going crazy and traveling 2-3 times instead of one, like maybe they did in the past. But as this is happening, and you emerged from the sustainability session just a bit ago, I'm talking about environmental sustainability, or the 3 prongs of sustainability: environmental, social, and economic. How is this intersecting, and how does it impact the availability of credit, availability of capital, and who has access to capital? Do these billions truly exist? And we have 3 people with money, but Kata doesn't. However, because she's not a banker, the others are investment bankers and lenders. But she influences them. She tells them if it's a good idea to invest in a venture or not, or maybe she advises on the other side companies on how to prepare themselves to access this capital. And I wonder, in this post-COVID world, as well as the increased recognition of the importance to adhere to sustainability principles, and especially ESG principles. Are we seeing access to capital change in this new world? How are companies approaching their lending or borrowing or capitalization decisions?
Did you want to start with me?
I would not start with you.
If this, oh, there we go, it is working. Thank you. So I don't have money, please don't ask me for billions, but I can confirm that there are in fact trillions available, depending on how you define it. Making the connection with the pandemic, certainly in infrastructure assets, transport assets, pre-pandemic, there was almost a frenzy of a huge amount of capital chasing few opportunities. There was a huge amount of competition every time there was a valuable asset up for sale or part of an asset changing hands. I think what the pandemic showed very clearly and tragically in many cases was that businesses that were previously thought very safe investments. I mean, in my case, I work a lot with airports. They were somewhat the poster child for pension funds, infrastructure funds who have huge billions and trillions under management. So COVID was certainly a wake-up call, and the perspective on risk has definitely changed. There's no getting away from that. But fundamentally, if you still believe that in the long run people want to travel, tourism can be a force for good, overall the economic and social benefits outweigh the downsides, then you must also believe that with growing incomes globally, more people will want to travel, and therefore the long term, whatever that looks like, will require more infrastructure, more businesses, more assets. And therefore, certainly, the money is coming back. You know, there is no shortage of capital. What there is often a shortage of is information. Disconnect between the people who are seeking funding and people who are looking to make sensible investments. And to your question about how is the sustainability picture entering this, what's interesting to me is that already, I mean, COVID has only accelerated things that were already underway. Whether it's digital modernization, whether it's sustainability, or whatever those, it has really accelerated those things. And it's been interesting to me, maybe with hindsight it shouldn't have been so surprising, but having been involved in ESG-related things before the global financial crisis, when aviation was starting to pay attention to its sustainability commitments and challenges, as soon as the GFC hit, that took a back burner, and everything was just about economic recovery. That has not happened this time, and if anything, COVID has accelerated commitments from these guys and their shareholders to demonstrate that the investments now for the longer term can be proven to be sustainable. So there's kinds of questions, for example, I will stop in a minute. Nobody ever used to ask when we were doing technical due diligences of a long-term tourism airport, what are the green risks? What are the environmental risks? Not really. It was maybe a last paragraph at the end of a report or a presentation. Now, climate resilience, regulatory risk, all of these things are coming much, much further up the agenda. Still, traffic and revenue, all of that comes first, but you really see it coming up. And I'm sure my panelists can provide more insight on that.
Sebastien, you're shaking your head. Do you agree?
I can only agree. I mean, obviously the ESG topic has always been a topic, but there is a huge difference between before the COVID crisis and now. I mean, as you stressed, and I totally share your point of view, it was a small paragraph at the end of a report. And now it's definitely part of all the work that we can do on the tourism part, and when we work with investors, more or less at Roland Berger in the tourism world, we do 1/3 of our business with investors, mainly private investors such as Henry, but also some public ones. And now, systematically, there is a very important ESG part, and both, and this is what also is changing, both offensive and defensive. There is a defensive part, of course, because all investors are a more risky also eye, I think, on tourism, despite everything that you stressed, that it's a long-term growing business, definitely, whether you look at the travel, the tourism, or the leisure, I think. But now, when people look at the ESG, it's one more time, it's both defensive, but also offensive, because I really believe that now there is an opportunity for companies to differentiate themselves by having a very strong ESG angle. And to be honest, there is not so many companies today that have a very strong ESG angle.
But ESG, is it just doing it because it's nice? Because that's kind of the buzz of the day, or is there a necessity for companies? Is capital, availability of capital dictated now by ESG, or is it an elective? What do you think?
So I would say it's an essential component of an underwriting decision. So we're a private investor. So we would not make an investment that was good for ESG, but a bad investment. But something that is bad on ESG criteria might per se be a bad investment because of whether it's the risk factors or the market factors that say these ESG comprises just about everything in the world. So it's a handy shorthand. But if a company that someone is investing in is on the wrong side of some big, whether it's an environmental issue or a social issue, such as being unpopular with the host country where you're doing a project, that has to be a factor in how someone looks at investing.
Interesting. Serge, you're a government-owned institution.
Yeah.
You're effectively the arm of the French sovereign fund. And I think you're both a lender and an investor. And because you have a development objective, your objective is not purely commercial. Do your lending decisions, or your investment decisions, are they influenced more by policy or by market conditions and hardcore banking conditions, I would say?
Yeah. Yes. Bank. The French bank. Yes, owned by Caisse de Dépôt and French state. And I think as far as and we are the main operator in this industry and tourism. It's about I don't want to talk about billion. That's about 3 billion euros per year, including our all activities and in financing, bringing guarantees to banks, investments, private equity, fund on fund, and support manager. I think first of all we have an educational role because for medium and small companies and to implement a good ESG strategy and action. I think for people, I don't agree quite with my friend because I think things didn't change so much after pandemic. I mean, in the behavior of people, they travel as they used to. I'm sorry, but to tell you this, that if you don't do something, it's what happened with the revenge travel in 2022, and they did what they did before, roughly. That's not true everywhere, it's not true, but media think that things changes, but in the reality, it's not so important. So we have to make action, us, investors, and tell people that business will not be as usual. And we have, I think, BP France, an educational role to this. So we make many actions like, first of all, I take an example with when we have a commitment investment, we make special due diligence, and if the company is not in this ecology and environmental transition, we may refuse to bring them loans. We have special loans dedicated to this industry, green loans, and we may refuse the loan. That I think something we did not do before. So it's new, but it's not linked. It's not linked to a pandemic. It's just an action we had before, and we began before. And strangely, pandemic doesn't change so many things. I think if you don't have a positive action, nothing will really change.
So we learned that if you're looking for billions, he alone has them. You don't have to look very far. Are these billions available? Are they available for larger firms, maybe easier than smaller firms? When you're looking at the kind of lending landscape, are the big boys more able to get the big money? And maybe the smaller business has a harder time. Is that something that, is it easy to generalize maybe?
I mean, I think it's a positive fact, but I see more and more investors from my angle looking at the tourism industry with different investment theses with different angles, and it goes from the venture capital that will look at small startup, especially in the distribution with a tech angle, to pretty classic generalist PE fund, to specialist PE fund, to infra fund, as you mentioned, to public investors. So in the end, there is a very big panel of potential investors, which I think is extremely positive for the sector, because when we talk about the tourism sector, we talk about a huge sector, very deep, very diverse, very scattered in the end, because there are some segments that are quite concentrated. I've mentioned the cruise line before, but when you talk about the activities, we talk only about very small players, except a few theme parks. It's a lot of very small players. So there is a very important diversity of opportunities, I think, for investors.
Is capital for money available for capital projects more readily available than it is for operating capital, maybe? Or is there a trend out there among investors and lenders?
I'd say it's very difficult to generalize. I can speak to the industry that I know best, which is aviation, and there's a difference in how investment decisions are made and how these companies operate. If you just think about the asset base of an airline, which has either owned or leased aircraft fleet, the barriers to entry are very different for an airline than they are for an airport. The degree of competition is very different. The infrastructure requirement for an airport is very different, and the ticket size can be quite different, again, depending on whether you're a 1 million passenger airport or you're Charles de Gaulle. So I would say it's very difficult to generalize. It really depends. I mean, to me, the challenge is matching the right investor with the right project. And there are, exactly as you said, Sebastien, it's there are appetites out there for all scales. The piece that we haven't touched on, which I think warrants a session all of its own, is the very small end. We all know that tourism is really, in numbers, dominated by SMEs and individuals, very, very small companies. And certainly from what we see, that requires a different solution, because the big guys don't have the bandwidth and aren't set up for that type of project. That's where more the public sector, the international funds, the donor agencies, the different programs can be more helpful. Certainly we see some very interesting developments in the microfinance space and so on, but that's sort of at the other end. So there is money. What sometimes happens is that you have the wrong project trying to convince the wrong investor or lender, convince them of the value, and a lot of time is wasted. Where there is a strong argument for scale is just recognizing that the huge amount of due diligence that goes into making one deal helps to explain why sort of that fixed cost of often hundreds of thousands of dollars, sometimes millions, many millions of dollars, depending on the deal. You're not going to do that if you're only investing $100 million. If you've got a much bigger ticket and you have to go through the same legal, environmental, economic, regulatory, all the other due diligence before you make an investment, then it makes a lot more sense to invest a bigger ticket. So there's that argument there, but that is not to say, and I fully agree with you, that there's an acute shortage of money looking at smaller projects. You just have to find the right match.
Is it easier for the bigger ones to find money, or maybe let's say for your company, what is the smallest ticket size that you would entertain?
So at the risk of being boring, I will agree entirely with the last two answers, that I'd say there are multiple capital sources, including funds like ours, that are looking to make investments in good companies and good projects in the sector. Each investor source is looking for different things, and as you mentioned, the ticket size varies depending on a number of factors that are usually quite knowable beforehand of like what. So our different funds have different ticket sizes. There are private equity funds who look like us, who invest smaller. There are many who invest bigger than us. So it's the matching of project or company type size and the investor is something that can work out relatively quickly. I think we are. We are one of the few sort of dedicated specialists in investing in travel, so we probably invest across a slightly wider spectrum in terms of size and structure than most funds would, because we are entirely in travel. And I think picking up something that was mentioned earlier on sort of risk environment and how people look at it coming out of COVID was, we continued to be active during COVID because we had a long-term view on travel demand, travel recovery. But anytime we invest, we have to take a responsible, prudent, long-term view of this an industry where things happen. We invest for the long term, and that links to, when I say good companies, that also picks up what you were talking about earlier on ESG, of say, you have to look at all the factors that might make investment good or not. But that said, no matter how much we love a company, if it's an SME, we won't be the right investor. I wish I could say we have capabilities for any size of company, but it's.
Is either of you have a view on availability of capital for the large ones versus the small ones? Do we have any?
Sorry, what was the question?
Any guess in terms of do we know out of the capital that is available out there for tourism, how much of it is it for the smaller ones? How much is it for the larger ones? Is that?
And from my angle, but it's a very personal angle. Huh? To be honest, I see options for all kinds of whatever the size. Whatever the size, at Roland Berger we work on small accounts and also bigger accounts. And one more time, I see appetite from all kinds of companies, and in big majority of the sector, it's still fragmented. So you always can have a thesis of consolidation. It's more a matter of this small company being well informed to go and pitch the right investor with the right thesis, because people expect once more different thesis. When you are an infra fund, you don't expect something as a classic PE fund. But overall, when I step back, I'm super positive on the sector. I'm super positive on the sector because I think that when you look mid to long term, all the ingredients are somehow positive. I mean, if there is one big lesson from the COVID to me is, how quick has been the catch-up, and how desperately people want to travel, but also spend locally. And that's also two very different theses. If you believe on the long haul, or if you believe in the domestic or local spend, and for me, it's very two good message that can target both big companies and smaller companies.
That's an important point. I think we've always said that tourism is perhaps one of the most resilient industries because it takes a hit and it comes back. And when it has come back, after SARS or even the financial crisis or otherwise, it came back very, very strong. And maybe one positive, unfortunate but yet positive in the overall sense of COVID, that companies that were kind of mediocre in their financial health were weeded out. And those that succeeded and survived are more likely to be bankable and more likely to thrive and more likely to grow. So maybe from a risk viewpoint, that puts them in a better position. Maybe I'll move to a bit of a different angle on this, Serge. Do you see, is it easier to invest in public-private partnerships where maybe the private sector comes in and takes over publicly owned assets and operates it? Well, it could be a castle, it could be an airport, it could be public land for a park. Or from a risk perspective, is it better to go for purely private investment?
No, I think you're right. It's first of all, just for us, sustainable tourism is not special, like sort of special form of tourism. Just all forms of tourism are concerned. For example, we always think that the activities like hotels or restaurants are ultimately local, but there's all the transportation to come there, all the infrastructure that we have. So it's not to be isolated in the company. We have to make a link between with what is publicly engaged and what is private. I mean, in the next few years, to succeed this transition, we'll need this infrastructure to be efficient. It's very important. For example, the work that is doing now our partner, which is the Caisse des Dépôts, is very important, linked to this infrastructure, because if you want a less carbon impact in the final activities that we finance mostly, I mean hotels, hospitality, and all this, we have to be to think about how the consumer goes to the final place, and how the transportation is, and what can we do about this. But everybody is concerned, public, private, and we have to cooperate, and it's very important for the future. And we have to have a long-term vision, not a short-term vision concerning this problem, because of course, there's some action that can do immediately in the company, in sort of example of how to do things more local, how to spend less, how to wasting, how it's an example of people waste many things at the hotels, for example, restaurants, how to do less waste, but we have to have a long-term plan and linked, the policies of collectivity, infrastructure, and private company together.
Thank you. I would like to ask the audience, or participants, if anybody has a question for the panel, and especially for those that are investors or entrepreneurs. But by the time you get both your question in place as well as the courage to speak to the microphone, I would like to speak to you about what we're doing on the other spectrum, because you did say the other side, which is the 90% of the industry. Let's remember that the bulk of the industry is micro, small, and medium enterprises that are not your clients. But that's who makes the tourism industry. It's the kayak operator, and it's the rafting operator, and it's the restaurateur, et cetera, et cetera. So in Bosnia and Herzegovina, we're working on enhancing access to capital to small and medium enterprises. And we conducted a study about the need for access to capital. We spoke to about 300 and some companies. Actually, the bulk of them said, yes, we want capital, we need capital. But at the same time, we spoke to the banks, and they said, well, the reputation of the tourism sector is questionable, especially that we did this right after COVID. And as a matter of fact, the first time we held our meetings with the banks was online because we couldn't see each other. So it wasn't the right time, maybe. But the bankers, in general, have an apprehension of the tourism sector. At least that's what we heard. And it was difficult to convince them to look at the sector positively. So number one, you speak to the senior bankers, and second, then you have the loan officers that need to make these decisions and make recommendations to their loan committees, what happens with these loans. But ultimately, we worked for about a year to speak to them about, we're talking about the resurgence of the sector and the future of the industry, and therefore the future looks rosy in terms of the resilience of the sector, and it's coming back. Because that's the first thing you look at, is the health of the industry itself, and then you look at the businesses. But second is inform them what is tourism. Because oftentimes they look at tourism as hotel and tour operator. But we're defining tourism much more expansively, which is the tourism value chain. What is the entire industry value chain? And if you follow the visitor journey from arrival to transport to the experiences that are on site, et cetera, it's a pretty significant value chain, as a matter of fact. A third of global exports happen to be in travel and tourism. And in many economies, the tourism accounts for 10 to 40% of the economy, so it's pretty significant. So for us, a furniture company that specializes in furniture for hotels is part of the tourism sector. So when they saw this, they said, well, our risk is going to be much more diversified and lower as a result, and therefore maybe we can have an appetite for the tourism sector. So now we're designing with banks what we're calling the tourism loan program, and I just signed three agreements with banks before I came here. And I have 4 banks waiting for me when I come back next week. And we have 2 leasing companies that are interested to sign with us for us to take their product to market. And what we're doing is, therefore, we're telling the borrower that the tourism industry, the banking sector is actually interested in you, number one, so you get the courage to speak to them, because oftentimes they didn't even ask the banker, would you take my application? And at the same time, we're talking to the bankers that the tourism sector is a profitable sector we should look at. And even the bankers are inviting us to speak to their loan officers and train them and build their awareness about the tourism sector. So I offer this as an example to even other destinations, other countries, to see that there are innovative ways, but also sometimes you need an outsider. That happens to be, in this case, a donor-funded project, a USAID project, to play the mediator between the whole sector and then the banking industry, and to creatively work on lending decisions. And but I know you have a view on maybe the reputation of the sector as well, not just from the SMEs, or maybe all of you. Does tourism have a bad reputation relative to other industries? And I don't know, are you also having it more difficult versus your colleagues that work in other sectors?
The renewables team are having a field day, I can tell you that, compared to tourism.
No, but your example is extremely interesting. I think that there is a matter of education here, or of teaching people, because as you stressed, when we talk about tourism, it's not only tourism operators. I mean, it's a full value chain, and it has a huge impact on the economy, and people tend to forget that totally. I remember 2 years ago during the COVID, people were even shocked to discover that in France, the tourism, it's a minimum 8% of the GDP. 8% of the GDP, it's just huge. Yeah. It has a huge impact in the end. And my fear is, if I have one fear, is that people forget that. That it's a huge ecosystem that resonates more or less everywhere, that impacts a lot of people, a lot of retail, typically retail stores. We don't think that tourism impact that. Yes, tourism impact them in the end. And I think it's pretty important, and that will be a good recommendation, by the way, of these 2 days here, to educate also bankers, because the big or medium-sized private equity fund, they have theses, they are sometimes specialized, but bankers that give loans day-to-day to very small companies, to SMEs, I'm not sure they have this level of education.
Interesting. Ian Taylor, Travel Weekly.
Shall I yell?
Yeah, you can yell. And
yeah, so I've got 2 questions, if I may. One is, there's a mismatch in perception of travel and tourism between the public markets, which don't value travel and tourism listed companies highly at the moment, and the perception of private investors. Why is that? What do you see that the public markets don't? And the second thing I wanted to ask was, when you're investing in a project or company, depending on the project or company, what is it that you look for in terms of sustainability or climate resilience? What is it that's important in your eyes?
I want to take the first now.
So the first question as to the disconnect between public and private markets is a very good and very interesting one. And if I had a really good answer to it. I'd be making a lot of money on arbitrage. But it's very interesting because it's actually gone back and forth over the last maybe 24 months where there was a period during the pandemic where I'd say the public markets were way ahead of the private markets in bullishness on travel, and then that sort of flip-flopped. And I'd say at this point it's maybe selective that the markets appear to like some assets more than others for a variety of good or bad reasons. And I think the other factor, as we think about the public markets in travel, is there are actually relatively few public companies in the travel sector relative to its size in GDP compared to anything else. So, say the cruise lines, the hotels, and the airlines are all sort of well represented in public markets, but there's very little of the rest of the travel value chain that is in the public market, and so that inevitably just means there's a lower level of coverage and investor attention, which leads to some of these gyrations or disconnects. I don't think there's necessarily anything structural. Happy to pick the discussion up offline, since it might get very boring, financial and technical. But it's a very interesting question to which I don't have a really structurally robust answer. But I don't disagree with the observation.
So what do you look for? I don't know, are regulators involved in any way? Is government dictating how or influencing how investors are making decisions?
Only through the regulatory frameworks that are out there, which then govern the investment case. So to the extent that investors might be thinking about things that are on the horizon, and certainly again coming back to aviation, EU taxonomy, will certain lending not qualify, or will certain investments not fall into sustainability? The ever-looming threat of aviation taxes. These are the sorts of things that directly or indirectly will influence an investment case, because prices go up, demand goes down. I mean, it's really that simple. That's sort of the level at which things get modeled. So these things can come almost from left field, and that's why these government interventions, I think, are really important. They can send very positive signals, or they can send true nervousness throughout the community, whether that's something that's picked up in the public markets or whether that's something that private investors are paying a lot of attention to. Certainly the European patchwork of different regulations and ever-changing regulations that certainly prey on the minds of investors, and certainly that's one of the areas that we often have to do the most amount of digging or convincing or satisfying that something is a risk or not a risk, and may affect the fundamentals.
Anybody else has a question from the audience? Let me, maybe Peter's giving me the nod. I will close it by asking each of you just a quick statement. What is the most successful way, you think, for a venture to sell itself? What do investors look for? What do you look for? What's the most important thing? Is it a sustainably profitable investment, or are you looking for more on the finance side than the doing good side?
Risk of repeating what I said in the previous panel, I don't see there's being a sort of conflict between the two, but I think that is a good, robust, long-term business plan, business model, with a strong team managing it.
What do you think?
Resilience, in simple terms. It's the one thing that has shot right up. I think the last couple of years have been a wake-up call, whether that is climate or sort of healthcare resilience, but actually it also feeds through to financial resilience. The ability to pivot to something, and those businesses which were able to take the pandemic and use their staff, their infrastructure, their buildings, their processes to do something else, to cushion the blow, to soften the blow, to use the time for training, those are the ones that are now on the platform. And those are the kinds of examples that people are looking for.
What do you think?
I would have said resilience also. There's not much, there's not much debate on this roundtable because we are pretty aligned. But yes, resilience with different angles. But yes, resilience.
Serge, you cannot say resilience.
Sorry, Serge.
Yes, for us, I think the far as banking is concerned. Models that we financed before the pandemic prove they were resilient now this year. And so our role is to encourage everybody for this huge and very important aim is to bring back, of course, banks to the sector. They are still there, part in France, thanks to us, because we brought many health guarantees, like Turizam and every sort of thing that we need them, and we need first for investment. For example, in France, it's 10 billion euros investment per year. If we want to bring this field at the right place, and we add now sustainability, which will cost, of course, but will bring us, I'm sure, profitable models for tomorrow.
Well, thank you to all. I would conclude by saying maybe we should revise the name of the panel to Billions Available to some, because the 90% have a harder time getting the money than the larger investors. And that is something we don't necessarily have to praise ourselves in forums like this or say we have all the solutions, because we should be posing questions for all of us to think about and work on in the coming period. I want to thank all of you for your wonderful contributions. We do have billions available in the panel, by the way. But for the sector, we still have a bit to work on. Thanks again.
3 billion.
Peter.
3 billion.
For you alone.